How I cut $800 off my mortgage payment without refinancing. That's what we're talking about today. Welcome back to the channel, y'all. This is Matt Garland, NMLS number 58700. But I'm better known as MG the Mortgage Guy. We are live. We are blessed. Thank God for another day. Happy, what the hell is today? Happy Tuesday, October 7th, 2025, fourth quarter. We are live. If you're new to the channel, make sure you subscribe, hit the bell for notifications, because you never know when I'm going live. Throw some gems in the chat, man. We're going to have a great conversation today. I'm looking forward to giving you guys some information that helped me personally save a lot of money on my mortgage. So obviously, interest rates have been coming down slightly, and people are just asking, should they refinance? Should they not refinance? Like, what should they do? Right. And most people think that they need to refinance to save money on a mortgage, which in most cases it is true, but not in all. So if you are someone who is a homeowner, if you're a homeowner, type homeowner in the chat. If you are a homeowner, and put your interest rate, what kind of interest rate that you have, put it in the chat too. Right. So like I said, most homeowners think the only way to lower their mortgage payment is to refinance, and that is a lie. I have a 3% interest rate on one of my mortgages, and I'm still saving about $800 a month. Right. And these are some of the easy things that everybody here who has a conventional mortgage can do. Now, if you have a FHA, VA, USDA, this is not for you, unfortunately, because the government doesn't allow you to do what I'm about to give you game on. Okay. So we got a lot of homeowners in the building. First of all, I want to shout out some of y'all, man. You know, Al got the 5.75%. Ooh, look at that 2.875. We got that nice 7.25 there, 6.78. We got a 3.99. We got a 6.375, a 2.75, a 6.25, 2.5%, 6.5%, 6.125%. We got a 3.375%. You know, I have rates as low as 2.25%, right? So shout out to you, Joanna, with your first home at 4%, right? Jessica, shout out to you. You got in the game at the 7.25, but don't worry, there's gonna be opportunities for you too. So we got a 2.25 here. So we got a lot of homeowners here in the building. Right. So this is right on time for a lot of you guys. But again, if you have a FHA, VA, or USDA loan, unfortunately, these tips and tricks that I'm about to give you right now don't apply to you. But when you do refinance and get into a conventional loan or buy your next property, this will apply to you. So make sure you bookmark and save this. All right. So one of the first things that I did was I did a mortgage recast, aka a reamortization. Everybody type in chat recast. Everybody type in chat recast. Everybody type in chat recast. Okay. Type in chat recast, because I'm gonna break this down for you and I'm gonna show you exactly how I did this and how this helped me. Right. So for those of you who don't know, right, a recast is when your lender recalculates your monthly payment based on your new lower principal balance without changing the interest rate or your loan term, right? So this is not like a refinance. You see, when you do a refinance, you're either going back to a 30-year, you're cutting the term to a 20-year or 15-year. But a recast, you're recalculating that monthly principal and interest payment based on your current mortgage amount, your current mortgage balance. And you're not changing the interest rate, you're not changing the loan term. So this keeps your original term and your rate of the mortgage. There's no credit pull for this. You could have a 580 credit score, 620 credit score, a 800 credit score, right? There's no income verification for this. So you can be unemployed and get a recast done. There's no closing costs, right? There's no closing costs at all when it comes to a recast of your mortgage. Now, you might have to pay a very small processing fee. It can range anywhere from $150 to $300. Okay. Pennies on the dollar, right? My recast fee was $225, right? You can do a recast multiple times depending on the service and lender that you're making the payment to. Okay. So you can do this multiple times during the life of the loan. This is not a one-time thing. Now, some lenders, and this is where you guys have to check with the lender. Some lenders will tell you that you can only do it once a year, right? You can only do it once a year. And if that's their guidelines, then that's their guidelines. You have to follow their guidelines. But my lender said I can do this multiple times in a year. I just will have to continue. Every time I do a recast, I would have to pay that processing fee of $225. Now, who qualifies for this? Again, if you have a conventional mortgage, your loan, it helps if your loan is owned by Fannie Mae or Freddie Mac, right? But if you have a conventional mortgage, if you don't know who your mortgage owns, you can do simple things. You can actually call them, right? And they can tell you, or you can go to Fannie Mae loan lookup or Freddie Mac loan lookup. Matter of fact, I'm going to put that in the chat for you guys real quick, right? So I'm going to put the link, Fannie Mae loan lookup. Right, so I'm gonna put that link in the chat. Make it easier for you, right? I'm feeling generous today. I'm gonna do some of the work for y'all. Okay, so here's the link for Fannie Mae loan lookup. Right, so I just put the link right there in the YouTube chat. You got the Fannie Mae loan lookup, and then now I'm gonna do the Freddie Mac loan lookup link as well. And you guys can go to these websites and you can see if Fannie Mae or Freddie Mac owns your mortgage, right? Boom. There you have it. There you have it. Okay. So if your loan is not owned by Fannie Mae or Freddie Mac and it's a conventional mortgage, then definitely call the service and lender tomorrow. This is everybody's homework assignment who's watching this right now live. And if you're going to watch this on the replay later, your homework assignment after you watch this is to call your service and lender and see if they participate in the recast program. Okay, because all services, they don't all have to offer it, but most of them do if you have a conventional mortgage, and especially if it's owned by Fannie Mae or Freddie Mac. Now, some of the services that I know of offhand that do offer this is Mr. Cooper, that's now powered by Rocket Mortgage, Chase, Wells Fargo, Rocket, PNC, Freedom, UWM, New Res, and there's a few others out there that participate. All right. So a couple that I know off the top of my head, Mr. Cooper, which is powered by Rocket Mortgage probably too, Chase, Wells Fargo, PNC, Freedom, UWM, and New Res. Now, here's a couple things that you guys need to know in order for this recast to work, right? And again, if you have an FHA loan, USDA, or VA, this is not for you. You are not eligible for recast because HUD does not allow it. Okay? So, here's a few things you guys need to know. Loan status must be current and no late payments. Now, when you cannot have no 30-day lates within the past 12 months and no 60-day lates within the past 24 months or 2 years. So if you are someone who has a 30-day late payment in this past 12 months or a 60-day late in the past 2 years, you have to wait until you meet a clean payment history for whatever time, right? Now, if you don't have no 60 days, maybe you had a 30-day mortgage 8 months ago, 9 months ago, it's okay. You just got to wait a couple more months before you're able to take advantage of this. Now, here's the most important thing I need you guys to know about this recast and how it helped me save money, right? This particular mortgage that I'm speaking on, I've been in it for about 4.5 years, almost 5 years coming up. I've paid about $100,000 down on the principal balance so far in this mortgage. So what I did was I called the servicing lender today and I said, okay, you know what? There's 2 things I want to do that's going to help me save money because I know I'm coming up on the 5-year anniversary. Number 1 is I want to talk to you about recasting the mortgage. So they gave me their rules and their guidelines, although I already knew the rules and guidelines, but I just wanted to hear from them. And they told me that in order for me to initiate the recast, that I would have to make a large principal payment to the balance. So the amount of monies that I've already paid, since I didn't make a lump sum payment, it was a part of my regular traditional amortization, that I would need to make a lump sum payment of $10,000 or more to trigger the recasting option. And I said, that's interesting. That's very interesting. I said, okay, that sounds like no problem for me. I can do that. And then I started running the numbers like, okay, you know what? This is a house that I actually want to eventually pay off. And for those of you who might be new to me, I'm talking about Garland Gardens. I say, you know what? I want to pay this house off probably in the next 5 years anyway. So I've already been working on my own plan to accelerate my principal payments. So I say, you know what? Let's run the numbers. If I put 10,000 down, 20,000, 25,000, 40,000, 50,000, let me just kind of see how much money that will save me, right? So I started playing with the numbers and everything like that. And it came to like, okay, if I make a large principal balance of like 35, 40,000, somewhere around there, towards my principal balance, that alone with the recast would save me about $250 a month on my payment without me losing my 3% interest rate. So it got me thinking. I said, okay, this is good. I said, 1, this is a house that I want to pay off. 2, I'm already in like the mindset that I want to fucking just own this house free and clear at some point. I don't want to carry no debt on my primary residence as I go into my 50s. So I said, okay, I like this. They told me their process is a real simple, easy process. Complete an application, send a check for $250. It could take up with 30 to 90 days, but they said they don't start the process until they receive my $250 check. And then at that moment, once they email and say they got my check, then at that moment I can decide exactly how much I want to pay down on my principal balance to really start that activation. Because without you paying down on your principal balance, they can't process the recast. So I said, okay, fine. So that's one thing that I did. So I'm gonna save around $200 to $250 right then and there. Are y'all following me so far? So I broke down the rules of the recast, and I gave you a little bit insight on how I'm saving up to $800. That was part 1, right? But I want to make sure, type in chat that you're tracking, that you're following, that you understand recasting. Do we understand recasting is not for FHA, VA? USDA. Do we understand that recasting is only for conventional loans? Do we understand that recasting is only if you paid down a significant amount of money on your principal balance, not including your regular scheduled amortization schedule? Are we following, y'all? Make sure y'all like this video too. Are we following? Okay. I just want to make sure everybody is following me and we're on the same page. All right. So now part two of me saving money is PMI. PMI. Everybody type in chat PMI. And if you have PMI on your mortgage, if you have a conventional mortgage right now and you have PMI, type I have PMI or yes to PMI in the chat, please. Because this is definitely going to be for you. Because this is something that I think people forget that they can do. And, you know, you hear about it when you going to buy a house and everything like that. Like, oh, you can always remove PMI, this, that, and the third. But I don't think too many people really understand the rules. Everybody talks about you can take away your PMI, right? At some point, but you don't really know when you can do it. Right? So we got a lot of people in here that have PMI. Right? And again, this is not a FHA, VA, USDA conversation. This is a conventional loan conversation, right? So my loan, when I purchased this house, I put down 10%. I didn't do 20% because to me, it didn't make sense to do 20%. So I did 10%, have PMI, which is around $586, somewhere around there, $587. You know, it's a big loan. So the PMI was hefty, but it was a lot cheaper than me paying an extra 10%, which would have been $90,000, right? So my PMI is 586 times by 12. That's 7,000. I've had this house for 4.5 years. So I've paid so far in PMI, which at the time when I got the PMI was tax deductible too. But so far I paid $31,000. Let's call it $32,000 in PMI, right? So I know some people are gonna say, "Well, you got money. Why did you just put 20% down?" Because another 10% would have been $91,000 at that time when I purchased this house. I've had this house for 4.5 years. So in the PMI, if you do that number times 4.5 years is only $32,000. So guess what? I saved myself, what's that, $60,000? It makes both sense and sense to me. And I knew at some point I would be able to remove this PMI with no problem. Y'all follow me? Because a lot of people look at PMI as the devil, but PMI is not the devil. If you know what you're doing and you know how to get out of it. So PMI removal rules for conventional loans only. You can request PMI cancellation once your balance reaches 80% loan to value. Lenders must automatically remove it at 78% loan to value per the Homeowners Protection Act. You must be on time with your mortgage payments. So again, no late payments within the past 12 months. Have no subordinate liens, meaning no home equity line of credit. Now, some companies, PMI companies, might be a little bit more flexible with that, but I'm talking in general, right? So check your service and lender for their guidelines specifically to remove your PMI, but I just want to give you guys some general guidelines, okay? Sometimes a new appraisal is needed if the value of your home has increased. And I'm going to get to that in a second. So now I'll get to it now. So what people don't realize is if you are requesting for PMI to be removed, there's typically no fee involved for you to remove, for them to remove the PMI. There's no appraisal that's needed, because what they're going to do is, in most cases, and this is what they did to me, I'm just telling you my experience. They looked at what my current loan balance is compared to the sales price of the home when I purchased it. They didn't look at, according to what my PMI rules for me to remove it, there was two ways I can remove it. Number one is I had to be 80% or less LTV of the original purchase price and my current loan balance, or they can look at a new appraised value, and then they will use the lower of the two number. So my new value on the home is well above, I mean, the house has just skyrocketed, right? And I'm not 100% complete with it yet. And it's when it's 100% complete, it's going to be 3x what I paid for it, right? But even as is, the thing is worth well over $1 million. So I am, market value wise, below that 80% mark. But they're looking at, since the lower number is my value of the value when I purchased it, the PMI company guideline states they have to use that number, not my market value. Right? So I said, oh shit, that's crazy. But good thing is I'm already in the process of doing this recast. So for me to get my LTV right now, my balance to my original value, I'm at 81% LTV. It's crazy. I'm 1% off. So I could, if I wasn't doing a recast, I could naturally just make my payments and let the amortization schedule bring my principal balance down naturally over the next couple of months, and then I will be below that 80% LTV probably within the next 6 payments, let's just say, right? But since I'm doing the recast and I'm going to put a lump sum, now I'm going to be able to accelerate that tenfold, because I am now putting this money down for the recast. So with the combination of me doing a recast and requesting for my PMI to be removed, which is on $586 plus the $200 and some change that I'm going to save, that's giving me about an $800 a month savings, right? $800 a month. Now, let's really get, now, before I go forward, because I'm going to give you guys some games of some shit that I'm about to do, and I want to put you guys on, because I want you guys to beat the interest trap the way I'm about to beat the interest trap and accelerate me paying off this house within the next couple years. And everybody here can do it. You know, obviously, depending on your income levels and stuff like that, you could probably do it faster than others, but don't worry. Slow motion is better than no motion, right? For all my people who said they got conventional mortgage, and especially if you purchase 2019, 2020, 2021, 2022, hell, even if you purchased in 2023 and you brought smart, you might have another 5 to 10% of equity since then. How many of you have 15 to 20% equity in your house and you currently have PMI today? Type it in chat, please. Let's see this. Type in the chat. If you have 15%, maybe 20% equity, and you still have PMI, type it in chat. Because what I want every single person who has a conventional mortgage, who might have some 10% or 15% equity in their home, 10 to 15%, 15 to 20%, whatever it is, I want you guys to go call your servicing lender tomorrow morning. I don't care if you do this on the way to work. I don't care when you do this, but this needs to be done tomorrow, right? And shout out to Tyra Jackson. I eliminated my PMI with an appraisal in 2023. Shout out to you. I need all of you to call your servicing lender, especially if you have been on time on your mortgage payments in the past 12 months. Call your mortgage company tomorrow and find out, do they allow you to do a recast of your mortgage, and can you remove your PMI? Daryl said we removed PMI in 2021 from our house we purchased in 2020. They did it in 1 year. Tanya says 15 to 20% of equity of the original purchase price or appraised value. Either or, Tanya B. Because if you have of the appraised value, your PMI guidelines might allow for you to use that appraised value and remove it. Okay, 699 in Baldwin. Shout out to Baldwin in the building. Okay, so your homework, the homework for everybody is to call your servicing lender tomorrow. Call your servicing lender tomorrow. Ask them about recasting your mortgage. Ask them about removing your PMI. Get the guidelines for it. Get the information for it. So that way you can make a educational decision, a wise decision, an educated decision, and a wise decision for you and your family. Everybody's situation is different. Now, some people might say, hey, Matt, why go spend $10,000, $20,000, $30,000 on paying off the mortgage? You could put that into the market, this, that, and third. Very true. But I'm at a place in my life, I'd rather pay off my house right now. I can still invest and still do what I have to do. I'm not choosing. It's not or for me, right? It's and. I want to do everything, right? Now, for those of you who for those of you, how many of you, let me ask you this. How many of you in this chat want to pay off your house, want to beat the interest trap? Type it in chat. How many of you want to pay off your mortgage, want to beat the interest trap, don't want to pay 3-4 times for your home? You want to pay this shit off. Type it in chat. I want to hear y'all thoughts on this, right? Because I'm gonna tell y'all what I'm about to do. Shout out to Tanya B. She said, okay, this is great information for myself and for my past real estate clients. Exactly, Tanya B. For all my realtors in the building, this is information, this is conversation that you need to start having with your clients, because again, realtors, we have to start being advisors, right? People are coming to you for the biggest purchase in their life. You have to show them and tell them what to do and how to do it, right? So we got a lot of me's. A lot of people in here, right? They want to get rid of this, right? You want to get rid of this. You want to get a pay off mortgage and pay off the rental, right? People want to get rid of this, right? You don't want to have this mortgage payment. So this is what I'm doing. So what I'm going to do is how I'm really going to accelerate this, right? I am going to Daryl said I'm trying to be debt free. Oh no, man. I feel you, right? She said, me and we just purchased, right? I do, but I got to go conventional first. Working on that now. Email us at Garland Group. Oh, okay. For those of you who are looking to work, there you go. I put that shit in bold too. Screenshot it. Holler at me. Tell me. Make the subject YouTube. You want to refinance. You want to purchase. You want strategies. You know what I'm saying? If you really want to take it to a whole nother level, hit that QR code. That's right here on the screen right here. Right here. Hit the QR code right there. Take a screenshot of that QR code if you really want to get some next level coaching and really get to it. Hit that QR code and join it in the circle. All right. Let me take this. Hit that QR code and join the inner circle. We're going to bring that back later. right? But let me tell you guys what I'm about to do. And what I'm about to do on my own mortgage, which is going to save me, because this is the wealth play, right? This is the wealth play. Lower payments equal cash flow, right? So what I'm about to do is I'm going to take that $800 a month in savings. Now, before I start with this, they told me it's going to take up to 90 days. So by the end of this year, going into the first quarter, my mortgage will be lowered by $800 a month, right? So that $800 a month is basically, what is that, almost $10,000 a year, right? Let me see, 800 times 12, $9,600 a year, just from that. So I can take this $800 a month and I can invest it. If I invest this $800 a month, not including everything else that I have invested, but this extra $800 a month over the next 26 years, right? At an 8% return, that's $589,000 I can make in 26 years. If I'm aggressive in my option plays and I'm making on average 20% annually, it's 2.3 million over the next 26 years. Think about that. Are y'all tracking what I'm saying here? This is the wealth play we're talking about now. Because we watching Market Mondays, we watching Trapper Tuesday, we watching all these shows, but we got to put this shit into action now, right? So if I want to take this $800 a month that I'm saving, I can turn this into a whole new retirement fund, right? Think about this. I can turn this into a whole new retirement fund. Or I can do option 2. I could do no investments. And I can put this into the mortgage, right? I'm typing to somebody. Hold on, privately. Give me a second. I got a little behind the scenes action going here. I couldn't really say what I wanted to say. All right. And don't worry if you're mad late. Don't worry. You can run this back. Okay. You want me to run this back? Okay. Let me run back the numbers I just said to you. Right. Let me run back the numbers I just said to you. All right. I see y'all interested in now. Now I got your attention with the wealth play. I got your attention. So I'm about to save $800 a month. So if I do nothing, if I don't blow this $800 on bullshit, which most of us, when we refinance and do all this stuff, we like, oh shit, we got newfound free money. We're going to do bullshit, right? If I take this $800 a month and I put this into a safe little S&P or something like that, right? And I did that and if I did no more, and I'm saying, I remember I got 26 years on this mortgage. So if I just stayed in this house for the next 26 years and I just did nothing with this $800 that I'm saving and I made no more lump sum payments and I just invested that $800 a month into something that's going to give me an 8% annual return in 26 years, that'll be $589,000 in 26 years. If I'm investing this to option plays, which we know we all love, and I'm aggressive and I'm making 20% annual, that's 2.3 million in 26 years. Are y'all tracking? I just want y'all to understand, this is how you build wealth, and this is how you use a tool like a mortgage, and you use all of this. Like I always tell you guys, a mortgage is a tool to build wealth if used the right way. I've been telling you guys this for years, right? I've been telling you this for years. So now let's go to the second half of this, right? Let's say I do the $800 a month into my mortgage. So let's just say I continue to make the same principal and interest payment that I have right now. And that $800 a month is going directly to my principal balance. Right? I'm going to wind up paying off the mortgage much sooner. Right? I'm going to pay off the mortgage in 18.9 years just by applying that extra monies to it. I'm going to save $92,000 in interest. Right? So now let's just say, first of all, are y'all tracking? Are y'all get it? Good question here. Mickey Faye said, will the lender care that you did a recast and then now you are paying the extra on the principal? Will they say, I can't do that? Absolutely not. Absolutely not. Absolutely not. Absolutely not. Aura says, is that after refinancing? What if we are COVID buyers and our rate is already low? Would that still make sense? Yes. So this is specifically for my COVID buyers because I purchased during COVID as well. The rate that I have on this property that I was speaking about is a 3% interest rate. Aura Ramirez. I'm not doing a refinance. I am keeping my conventional mortgage at the 3% interest rate, and I am recasting my mortgage balance and my amortization to match today's balance. Because, see, guys, you got to understand, when you close on a loan, whatever that loan amount is, your amortization schedule is based off of that original loan balance. It's not calculating the new balance that you have. If that was the case, then your mortgage payment will automatically drop every single month, right? But yet every year our payment goes up because escrow goes up, correct? Right? So with this recast, what you're doing is you're re-amortizing your loan, right? For that. So, all right, you come to the right place. She said recast. Okay, I've never heard that term. How many of you guys are like Aura? You never heard of recast before until tonight? Type your thoughts in the chat because I want to welcome you to the dark side and welcome to my world. Tune in for more, okay? Because I got a lot more where that came from. Because I know a lot of people never heard of this. Because I've been telling people that's close to me about this. They ain't looking at me like I'm crazy. Right? Never heard of it. Right? I never heard of recasting. Right? First time. Never heard of it. Agree, laughing out loud. And I know I have a lot of equity, laughing out loud. Never. First time. Bruh, same here. Never heard of it. This is new to me. Guys, the people are talking right now. Okay? So I'm happy that you all decided to tune in to me today, but this is what I do on a regular basis. I give you guys information so that way you can go out here and execute at the highest level. Right? A lot of y'all saying this is new to me. So I'm happy that you guys tuned in and you're able to do this. So let me get back to you to my place. What I'm going to do, because somebody asked me in there, thanks for the gems. This is new to me. Come on, dark side. And if you guys really want to come to the dark side, I'm telling you, Scan this QR code that's on my screen right here. Scan that bad boy. I promise you. Join. I promise you. Any of my inner circle mentees, tap in right now. Tell them in the comments what they are missing, because I'm telling you, this ain't shit. And I'll give you some success stories. What's going on, bro? Check this out. Remember I was talking about refinance the other day? They wanted me to bring this month mortgage payment to the closing and start my next payment November 1st. Yeah, that's because you're doing a streamline, I believe, C's. I think you're doing a FHA streamline. So yeah, that sounds about right. New homeowner, and I have no idea about this. Okay. This is the tip of the iceberg. Okay. Scan that QR code and come to the real dark side. But let me tell you guys what I'm going to do, because somebody asked that in the comments and I want to make sure that I get to that, right? What I'm going to do, like I said, I'm in a plan to aggressively pay off my home, because I don't plan on moving. I'm going to be 50 years old in 3 years. I know black don't crack, you know what I'm saying? Like, but you know, I'm going into a phase in my life where I really don't want to have a mortgage on my house. Bad enough my taxes are already fucking expensive. So I'll just deal with that shit. But for my personal primary residence, I just want to pay it off at this point. So I am going to accelerate my strategy on paying off my debt on my home. And I want to do this over the next 5 years. Shout out to Ty. She's a lifetime member of the dark side. Shout out to Ty. So I am going to accelerate me paying off my primary mortgage, even though I have a low interest rate, but I just don't want to be bothered with it no more. Right. So my plan is to aggressively pay down, meaning instead of me now, and now that I understand the rules of my lender when it comes to recasting, I am not going to do extra principal payments on my mortgage, right? Because that's the common thing that we all do, right? Is we say, people tell you want to pay off your mortgage, pay extra payments, pay bi-weekly, do all of this shit. No, I'm not doing that shit, right? What I'm going to do is I'm going to create lump sum payments. So what I'm going to do is that $800 a month, I'm probably going to add more to it, and I'm going to invest that money into stocks, options, or high yield savings accounts, right? And I'm going to run that money up every single month, dump into that fund. And then at the end of the year, what I'm going to wind up doing before the year ends, every single year, is my plan is to do a lump sum payment every single end of the year, maybe around Christmas time, December, whatever. Do a lump sum payment. And now when I do that lump sum payment, whether it's 20,000, 50,000, 100,000, whatever that money is, I'm going to do a lump sum payment. As long as it's over $10,000, now I can initiate another recast. So every time I make a lump sum versus me making the extra payments and everything like that, which I still can, right? Because if I do a extra payment and everything like that, I'm still going to save interest, but I can still do it works the same way, right? Whether I do it monthly or whatever the case may be, or I just do a lump sum, it still saves the interest. And that's what I'm really focused on, not paying as much interest. So, and with me knowing that they want $10,000 minimum to activate or trigger this recast, I need to make sure I'm making a lump sum of over $10,000 annually. That makes sense? For me to now pay that one-time fee of $225 to now recast the amortization to bring my payment down. And then now that would create more savings. So this year, I'm saving $800, right? Because I'm removing PMI and I'm doing my first recast. December 2026, my goal is, God willing, I'll be able to do at least 50 to 100K. And I'm going to use the money that I start saving in the beginning of the year, that $800, putting it into investments so I can run it up there and then pay that down. Now, obviously, you got capital gains that come with that when you're taking the money out of investment accounts and things of that nature. So again, I might have to buy some real estate next year to offset some of these capital gains and things of that nature, right? So you just got to know how to play the game, right? But that's a different topic for a different day. But that is my plan of what I'm going to do, is to continuously recast every time I make a lump sum payment. So that way my monthly mortgage payment continues to trend down, because we know escrow goes up. Now, here's another thing I want to tell you guys what I found out also. My lender will allow me to remove the escrow once I get a certain loan to value. Again, my lender will allow me to remove the escrow from my mortgage payment. I think I said once I get 75% loan to value, they will allow me to now pay my own taxes and insurance on my own. So that's also something that I'm going to consider probably in the next couple months as well. So that way I am getting the insurance bills. And if I don't like the insurance quotes, because these insurance companies are going crazy. And remember, the bank, when they get a bill, they just going to pay it. They're not going to notify you until that escrow analysis comes out. And then they're going to say, well, this is this and this is that. Right? Now your payment goes up by this. But again, that's strictly for live men, not for freshmen, y'all. Strictly for live men, not for freshmen. Because them people want their money rain, sleet, hail, snow. So do not separate your escrow if you're not disciplined. If you're not disciplined, maybe just take your insurance out if you have that ability to do so, and let the bank continue to pay your property taxes, because the town will foreclose on your ass if you don't pay those property taxes. But that insurance, man, these insurance companies, they fucking doing the most. They are doing the most, right? So that's my plan. Long story short, that's how I cut $800 off my mortgage without refinancing. And then probably this time next year, I'm probably going to make another video talking about how I saved another probably $800 to $1,000, because I definitely plan on being aggressive with principal pay down over the next 3 to 5 years on this mortgage. So I'm pretty sure my principal and interest payment will continue to go lower. Any questions? My insurance went up a little over $1,000. I canceled and went elsewhere. Good for you. What about getting a HELOC and making it a primary and paying your bills from that? Is that a bad idea? I think, that velocity banking strategy, I don't think it's a bad idea at all. I think, like anything, guys, everything's a tool, right? Everything's a tool. So you have to use whatever tool works for you. Whatever tool works for you. So if you think, Al, that getting your HELOC as your first mortgage and doing that strategy works for you, then by all means, look into it. Run the numbers. Look, men lie, women lie, numbers don't at the end of the day, folks. So you got to make sure that you are running the numbers and make sure you do what you have to do. You know what I'm saying? Can you recast without PMI? Yes. So a recast and removing PMI are separate and apart. I told you how I cut off $800 off my mortgage payment by doing a combination of the two, right? But if you don't have PMI, and if you plan, and for those of you, look, let me actually let's take a poll right now. And this is not just for primary residences, right? If you have a conventional mortgage and it's an investment property, it's a conventional mortgage, you can probably do this too. Actually, I'm calling because I have two in my in my personal name that investments. I'm calling those lenders tomorrow. Because if I, especially on investments, if I can save a couple dollars on them too, I'm gonna do it. For those of you, let's take a poll. Like I said, how many of you guys have? A lot of you said that you want to pay down your mortgage aggressively. Are you in position to do lump sum payments? 10,000 or better. Are you in position to do 10,000 or better? If you are in position to do 10,000 or better, and if your goal is to beat the interest trap of your mortgage, to pay down, to accelerate that debt, right? Then I would recommend stacking your money until you got $10,000 or more, and then make that, if your bank participates in the recast, right? Because a lot of people say not at the moment, right? Save towards it. If this is something that you want to do, an easy way to save towards it, guess what you can do? Tax time is coming. Tax time is coming, ladies and gentlemen. Do it once a year when you get your tax refunds, right? See, I was told by my agent to make 2 extra payments towards the interest by my agent. See, Coach Lakeisha, that is not bad advice. But what I'm talking, that's not going to lower your payment. You see, that's going to lower the interest on the back end. But let's call a spade a spade. We don't see that interest on the back end. We see what we got to pay every single month, right? We see what we have to pay every single month. That's what keeps us strapped. So for those of you who do get tax returns, and for you, Coach Lakeisha, instead of making those 2 extra payments towards your interest, call your service and lender tomorrow, see if they participate in the recast loan and what is their guidelines and rules to start that recast. If they tell you got to make a lump sum minimum payment of 10,000, 5,000, then your goal should be to save that every single year versus putting it towards your whatever they told you. And your goal should be to make that lump sum so that way you can now recast and start saving money on your principal and interest payment. Because a penny saved is a penny earned. Even if you save $100, $50, $200, like, so fucking what? It's better than nothing. No, it would not make your interest go up. So again, guys, for those of you who are coming in late, your interest does not, your terms and your conditions of your mortgage are not changing. It's not a refinance. A refinance and a recast are separate and apart. 2 different things. Recast, you don't pay no closing costs on it. You have to pay a fee anywhere from $150 to $300 depending on the lender. You have to have a conventional mortgage. Can't have FHA, VA, USDA loans. They don't participate in it, right? Has to be conventional. Can't have no lates on your mortgage in the past 12 months, right? The terms, your rate and your term doesn't change. You're not going back to a 30-year mortgage. You're not increasing the principal balance of your mortgage. The goal of a recast is to restructure the amortization of your loan to match where you currently are right now. So if you started your loan when you purchased a house at $400,000, but you currently owe $330,000, your payment, your principal interest payment is still based off of that $400,000 when you closed. It's not on that $330,000. What a recast does is it brings your payment to match that $330,000 that you currently owe, which now that's going to save you money. But most banks who participate in this recast, you have to make a lump sum payment to trigger the recast. Are we tracking, y'all? Type tracking in chat if you are tracking. Type tracking in chat. Okay. 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 We tracking. How much of a lump sum? Call your bank tomorrow. My bank told me 10,000 minimum lump sum to trigger it. But you guys are tracking. Okay. Okay. My ass straight to work. Thanks, MG. No doubt. Thank you guys. All right. So that's my story. I'm sticking to it. I told you how in this video, I told you how I'm saving $800 a month with a combination of a recast and getting rid of my PMI. Good question. Yes, the one-time payment count towards your loan amount. Yes, it count towards the loan amount. You have to pay the money to the loan. You're not paying the bank a fee of 10,000. You have to make a lump sum to the principal balance in order for you to trigger the recast. So yes, it only helps you. Thanks so much. Great info. I'll be calling my lender tomorrow. I'm on it. Now, for all of you who are going to call your lender tomorrow, I want you guys to flood my comments tomorrow morning. Flood the DMs. Put it in your stories. Make a fucking video on your stories and tag me to it. Matter of fact, make a video on your stories. Tell me like your story. Yo, I called my lender. They said I can do this. I can remove my PMI. I can save this. Thank you, MG, for this video. Right? Give me some love. How often can you do a recast? Call your service and lender to find out their guidelines. My lender said I can do it as often as I want as long as I pay the $225 fee. MG, you cooking. So can I use my HELOC for the lump sum? You can, but why the hell would you do that? Because the HELOC now, when you do that, you're going to have a payment for using a lump sum on the HELOC. So like you just smacking yourself in the face, basically. Man, if you don't take that HELOC YG and go buy a property, invest in the business, or get some stocks and some options, man, you better not use that HELOC to pay off your first mortgage, in my opinion. All right, I have an FHA loan, but it still will be a good idea to pump 10,000 yearly. No, absolutely not. Because now you have, I think you say you had a 3.5%. You have an FHA loan. Your PMI is never going to go away, regardless of what you do. Right? I would rather it's unfortunate unless interest rates go to like, even if interest rates and this is for all you FHA folks out here, right? If you had an FHA rate of 3.5%, 4%, and even when conventional loans go to 4.5%, I probably will refinance and go with the higher interest rate on conventional, remove that PMI. I mean, obviously you gotta look at what the payment numbers are and shit like that. But that's personally what I would do. I would get the hell out of the FHA if you can, and so that way you can get rid of that PMI, even if you had to pay at least 1% higher interest rate. But you got to run the numbers. But I potentially would do that because if it makes both sense and sense, right? You got to run the numbers, the closing costs, everything has to make both sense and sense. But I would potentially refinance out of that if the conventional rates were lower. Me and my bro in NACA program, MG, thank you. I appreciate that. No doubt. Get that NACA loan. Free money. I love it. YG, I'm on it, bro. Numbers don't lie. Appreciate that. Make sure y'all like this video. You know what I'm saying? Yeah, man. Yeah, man. Numbers don't lie. So, yeah. So I know that's scary, Aura, when you're talking about refinancing onto a higher rate, but don't be married to that rate too long to where it block your blessings, because you might go conventional and your payment might wind up still being a little bit cheaper, even with a higher rate. You never know. Got to run the numbers. Good shit, y'all. All right, so we've been on this for an hour. A lot of you guys, you had some great questions. Again, scan this QR code that you see right here if you really want to come to the dark side and come to be a part of my inner circle. Be a part of the inner circle, man. You'll get a lot more information. There's people that I'm saving so much money. Like one of my mentees, I ain't gonna blow her up right now, but she been a part of my program for 2 weeks and already saved her about $70,000 on one of her offers that she just got accepted. By her listening to my coaching, she saved $70,000. So the money that she paid for my mentorship is free, and then we doing a rehab loan, which is she's gonna have 250 to 350,000 in equity when we all said and done. And then after that, my tax strategist is going to chop and screw this whole thing up, and she gonna save some more money. That's just I mean, I got so many success stories in my inner circle. I got a mentee right now that's doing a rehab deal, got a couple 100,000 in equity from it. When we made a super disrespectful offer, when her realtor was telling her, no, don't make this disrespectful offer, we made the disrespectful offer anyway, and they got accepted, right? I'm all about making sure my people win. I'm all about making sure my inner circle mentees got the proper coaching, they understand financing, they get one-on-one calls with me. Most of my inner circle mentees, they'll tell you they text me all day long. I got people on my text message right now as we speak. That's why I keep texting. If y'all ain't paying attention to that, I'm texting my people right now. It's 10 p.m. Right? So if you want to learn more, what you get, all the deliverables, scan that QR code that's right above me right here. Take advantage of it. Take advantage. But more to follow on that on another day. Shout out to the West Coast. How do you West Coast investing like? How do you view West Coast investing like Arizona? Good question. I like America in general. I like everything that America has to offer from an investing standpoint. No matter what city, state that you are investing in, you have to understand men lie, women lie, numbers don't. And that's why I do have an inner circle mentorship. It's for me to help you analyze the numbers and run the numbers, because it doesn't matter where you are. There's deals everywhere. You just got to know how to analyze them. You got to know how to run the numbers. You got to know how to fund it. You got to know how to exit. You got to have the resources, the boots on the ground to make sure shit is going the way it needs to go for you. Right. And that's what my mentorship is all about, is helping you achieve your goal to the highest levels possible. Shout out to LJ. LJ and TJ. What up? The inner circle's in here. MG, I need some directions to get equity out of my second house. Well, QR code, join the dark side. I'll help you not only give you directions, I'm going to give you coaching and mentorship and guidance, not directions. I'm going to give you the blueprint on how you not only take money out of this home, but how do you make money from doing this. Scan the QR code. Come to the dark side. If we join now and the program is 1 year, when does it start and it end? Tyra, it starts when you pay and it ends on that day, a year from then. So if you pay today, October 7th, it ends October 7th, 2026. So it starts immediately. Join, go into your product library, go to the one-on-one strategy call portal, and book a consultation. Book a one-on-one with me ASAP. Let's get on a call. Usually those calls is 30 minutes, and let's chop it up. Okay? And my people will tell you, I got a couple of my inner circle mentees will tell you, they in the chat right now. If you're part of the inner circle, can you please let these folks know that I am accessible, that you can text me. You get my real phone number. You text me day or night, I respond. Weekends, I respond. I get on phone calls with you, even when it's not your scheduled calls. I respond. There's no one out here running the program like I'm running the program. And for the amount that I charge is absolutely free. That's a fact. And I'm not even bragging. I'm just telling you guys the truth. Right? I'm just telling you the truth. Right? I'm just telling you the truth. My people will tell you, look, no bullshit, no nothing. These are not paid actors and actresses in the comments. These are not bots. These are real people who got motion. Because if you got motion, I got motion. That's my slogan. If you got motion, I got motion. If you ain't got no motion, don't schedule no call. Because what's the purpose? We're going to sit here and shoot the shit. We can shoot the shit if you really want to shoot the shit. But when you on the call with me, yo, let's get to it. What we doing? How we doing it? There you have it. And you just, the disclaimer, and be ready for the truth. Sometimes it's not pretty. Laughing out loud. That's a fact. I'm trying to be real nice lately. Real nice. Shout out to Michelle. Michelle just joined. Michelle winning. All right. Arthur said, when I get in order, I will book a consultation. Well, let's go. I recently retired but have rental income. Can I pull money from the house? I don't know if you can or not. I have no clue. I have no clue. I don't have enough information. Shout out to Michelle. She said, I can't think enough. Now, just a little while ago, Michelle, I was just telling them about, you just joined like 2 weeks ago. And I said, look, she already saved $65,000. And Michelle got motion. Literally, Michelle just joined 2 weeks ago, if that. And a house that she was looking at, I'm not going to give you all the details, but long story short, she saved about $65,000 off the offer price by listening to what I was telling her to do. And at first it was kind of like, I don't know, maybe we should go a little higher. I'm like, no, trust me. And then she was like, you know what? I'm going to trust you, MG. And she trusted me, and she got that offer accepted literally this week. Yesterday, she texted me about it. Yesterday. And the beautiful thing about this is that we're doing a rehab loan with this, y'all. So once she does this rehab, she's going to be up probably $250 to $350 in equity. So this mentorship for a year for her is free. Yo, I love it. I love it. I should be charging $50,000 like everybody else is. I'm making people money over here for the loan. So shout out to Michelle. She got motion. See, when people got motion, It makes it a lot easier. And look, I'm not sitting here BSing y'all. This is real facts. She said, I got 10 plus years free, laughing out loud. That's a fact. That's a fact. I'm trying to tell y'all. This shit works if you work. This works if you work. If you don't work, this ain't gonna work. And this is why I tell people, if you got motion, I got motion. If you out here really moving and shaking, if you got credit, capital, and the capacity to go out here and buy real estate, you're gonna go out here and you're gonna win it. I'm gonna help you. LJ says, nah, bro, keep it 100. Don't change. If you too nice, they may not listen. True. I ain't never changing. But yeah, that's my story. I'm sticking to it. Like I said, scan the QR code that's right here if you want to come to the dark side and really make some money in the real estate game. I'm here to help and support you any way that I possibly can. And trust me when I tell you, this shit is almost free. It's almost free. All right, I'm gonna take one more good question, and then we're gonna roll out of here. We've been on here for an hour and 11 minutes. Goodness gracious, we've been on here too long. I didn't even want to be on here that long. This was supposed to be a 20-minute call. If you got value out of it today, type your thoughts in the chat. Remember, your homework for tomorrow morning is everybody with a conventional mortgage, especially if you have PMI. Call to see if you can remove your PMI, and call and see if your bank participates with a recast. If I make a lump sum payment of $10,000, will the new balance of my loan be $10,000 less? Yes, Teresa. Yes, it will be. Okay. Yes, it will be. So call your servicing bank tomorrow morning or whenever you're watching this. It could be a week from now if you're watching this. Call your servicing lender. Get to it. Okay. Get the answers. I gave you enough in this hour and 12 minutes for you to have an intelligent conversation with your servicing lender. Talk to them, speak to them, go back and rewatch this video, take notes, use ChatGPT, Google, research on your own. This was free game for you. Again, we had over 200 people watching this live. I didn't even stream this to Instagram tonight. I just did it straight on YouTube. Guys, if you, a lot of you say you never heard of recasting prior to this episode, I'm gonna ask you again, if this was your first time hearing about recasting, type "this was my first time" in chat. And if this was, and if you got value from this, like the video. Most importantly, go to the playlist, man. Go back and watch some of the shit that I've been doing over the past year or so. There's a lot of good information on this channel that can really help you, right? My free game is real game. It's not no bullshit. It's not no fluff. Like, you can go there and just be on my YouTube and watch, and it's a masterclass, right? I said, absolutely. I may have to stop playing and hit the dark side. To be honest, I drink. I smoke 500 monthly. I mean, this is what I'm saying. If you drinking and smoking 500 monthly, then imagine if you putting. So think about this, right? And Aura, I appreciate your transparency on this one, because I think this is the realest shit that someone has said on this in the comments in a very long time, because a lot of people do the same thing. We all bullshit $500 a month away, right? And especially if we all like to drink, we all like to smoke something. It's doing nothing good in our body. But if you take this $500 a month and you join the program and you investing into your intellectual property, not only are you doing your body good, you're going to get an infinite return on your investment. There's no way you're going to lose money if you execute the right way. Even if you might feel like you're not in position to buy something today, even if you feel like, yo, I got another 2 years before I can do something, you got to have your P's together. Proper prior planning prevents piss poor performance. The more you learn, the more you earn. So if you're investing into yourself, right, with this education, this high level education for just $500 a month versus you drinking and smoking it away, you have nothing but upside. Nothing but upside, right? Nothing. Lawrence Mack said it's his first time and he's a realtor, right? Shout out to you, Lawrence. I'll wait for rates to go down. I'm not sure why you want to wait for rates to go down when you can save money today. So you're going to wait for rates to go down, which is still not bad. Adrian Falk, you want to wait for rates to go down. Cool. If you are in position to recast and save some money today, why not save money today? Because it costs you probably $100 or something like that. You can recast, and then you can refinance later if rates go down too. Why not save money now? Or you could just wait, whatever works for you, right? Whatever works for you. Yeah. So if you close with me in 2022, then, and if you have a conventional loan, Adrian, then you should definitely recast. Adrian, look, call your service and lender tomorrow. I'm not sure if you have PMI or not, Adrian, but see, if you do have PMI, see if you can remove your PMI and see what the rules and the guidelines are for recasting your mortgage. You have FHA. Yes. So then you have to wait. You have to refinance. So when rates drop well enough for you to do a refinance out of this FHA loan, you're going to text me, and then we are going, because FHA didn't allow recasting or dropping the PMI. So we're going to have to refinance you into a conventional when the time is right. Okay. So that's all I got for you guys. Make sure you like, comment, share, subscribe, hit the bell for notifications. We've been on this for an hour and 20 minutes long. This was a great educational video. We got some Q&A, and again, if you want to be part of the inner circle, make sure you scan the QR code that's right here on this side of the screen right there. You can do the lump sum payment, or you can do monthly payments. It's priceless. The amount of money I'm gonna help you save, and the amount of gaming gems and information and community that you're gonna be a part of when you're part of my inner circle. So make sure you scan that QR code right there. Yep. See y'all in the circle, says spinning cookies. Spinning cookies. I don't know what you spinning. Yo, that shit is crazy. That's crazy. Spinning cookies. All right, that was funny. I don't know. I need more information on that, but I see y'all on in the circle. Share this with some people, and again, hit the bell for notifications. If this is your first time watching my content, make sure you go to a playlist. There's a ton of information in my playlist, man. I'm telling you, you can sit here and binge watch my content and come out here super smart, all about real estate. All right. So Matt Garland, NMLS number 58700. Oh, matter of fact, before I go, let me not even do the intro. Email garlandgroup@unmb.com if you want to purchase, refinance, buy investment properties, commercial properties. Make sure the subject says YouTube. Okay. So if you want to buy, refinance, primary home, second home, investment properties, commercial properties, for all your mortgage funding needs. If you need funding nationwide, holla at your boy. Email us, garlandgroup@unmb.com. We would love to help you. If you're learning from me, give us the opportunity to earn your business too at the same time. All right. Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. Peace.